those holding longs and wanting to see new highs look around and they say, are there going to be those that join me?
Hi, once again, everybody. Thank you so much for joining us here. I'm Marlin Bohling with you, and we love talking with you about ag commodity markets. Today, we're going to be taking a look at Wednesday's market action. And I want to remind you, make sure that you like these videos. Make sure you subscribe to the videos by clicking on that bell icon down below and share these videos with others, as you have been doing. We can tell because we're still one of the fastest growing ag podcasts out there, thanks to your help. Well, today I have Joe Kemp with me. He is with Comstock Investments. We're going to take a look at developments on Wednesday. And there are quite a few things affecting the markets right now. We have harvest, we have weather, we have a big report coming up next week. We have elections coming up and just all sorts of stuff to take a look at here, international developments. So let's run through the grains first of all here today, Joe. By the time they came across the finish line, pretty good day on the wheat and beans, right?
Yeah, you talk about all that's going on here. What a change of pace from, well, when we visited last week. The theme was how quiet markets were, how traders were settling into harvest, waiting for some fresh results, looking for direction on the reaction to the Fed meeting from the outside financial markets, looking towards the weekend and all that eventually did go on in the Middle East. But back here pretty quickly to seeing now some more enthusiastic buying interest in particular. So we think about the speculative crowd not only covering shorts, but potentially stepping in with some fresh long interest in this market after having, of course, been so negative so long. And here it occurs at a time where we're ramping up into harvest. Well, actually, that's not historically unprecedented. It's just the case right now, certainly this week, that these speculators are buying faster than we're seeing those farmers sell. And that can change. We talked to a lot of folks out there that are really ramping up probably later today and on into tomorrow. There will be fresh bushels available here increasingly, we know, as these days roll forward. But good price action this week for sure, and including today, the down early and then up at the close.
Well, we did have some overnight export sales reported, a little bit of corn, right?
Some corn for a change, back to being corn sold to Mexico. It's not that demand that we'd like to see from China. There were questions about a week and a half ago, some corn sales to an unknown buyer popping up and wondering if China is stepping in yet. They're not officially on the books yet for new crop corn, and that would put them well behind where they have been in the past, say 300 million bushels or more of the new crop committed at this time. So we know that Brazil has been making up in this last year and a half for more of the market share on the corn side. Lately, the pathway for China paved with Argentina, not getting that demand, but good to see it still coming from Mexico. We know last year, at least, that demand lost to China was more than made up for by gains to one, primarily Mexico, but also other countries like Japan, South Korea, Colombia.
As I mentioned, we had a big close in the soybeans. They've had a nice little run here lately, but are they to the point where they're getting a little overbought, at least short term, or not?
It could be that case that the perception of a short-term overbought rally is starting to flash because of where the prices are positioned on the charts. If you measure certain volatility bands or retracement targets into psychologically important marks, where I think I would get back to looking at first because of how we open this look at what the speculators are doing relative to the farmers as they have new bushels to sell, and who goes about it faster is a real test of where prices are going to head. And what we could see going forward is now that soybeans have hit 1050 for futures, I've got farmers saying, well, you know what, I'll be into the beans again later this afternoon or tomorrow. Might be that I'll be able to sell some bushels across the scale at $10 cash. Other places, of course, are going to be waiting a bit for firmer basis, but ultimately rewarding what has been on the board now, a dollar rally from the mid-August low. And so that's where we'd wonder if there's going to be any pressing pause here. We've talked a lot about the funds short covering. to some extent, at first we were wondering, well, they're whittling down these big bearish bets, but we're not seeing a huge price response. But then again, all of a sudden now, it has been $1 worth of a rebound for nearby soybean futures, and for corn futures, we're talking about 55 cents of a gain since, again, about 5 weeks ago. So to think that we'd have some rewarding of the rally, not only by speculative longs that are fresh or by underwater longs that are remaining for a while now, you have this transition ultimately for now still favoring friendly. So we'll see how it goes the rest of the week and on into, again, the more busy harvest month of October coming up.
Do you think the grains look more attractive now after that interest rate cut?
To some extent, yes, that we're in a pathway where interest rates are going to continue falling, and that may eventually put pressure back on the dollar index. So far, that's been a bit of the confounding reaction, is that the dollar index, while initially after the Fed meeting dropped lower and even poked just briefly below the 100 par mark, well, it's back above that since then. We think we need to have confirmation that the Fed is still going to be dovish throughout the rest of the year, get that interest rate down another half a point at least by the end of the calendar year, and then still be more accommodative heading into 2025. And if that's the recipe, then we can look back to years like 2020, which is the last time that interest rates started moving lower. It was also the last time that grains had these big major lows. It was also the last time that you had the hedge funds shift from being big bearish participants in the market to, by the end of the calendar year 2020, having big long futures positions. And the other similarity, of course, to 2020 is that's our last election year. And all of a sudden, that's coming up every day as a topic of interest. It was today, certainly, talking again about tariffs. It's politically driven outside of the United States as well. When you look at China and their movement of products like edible oil substitutes in the market, a lot of moving parts here politically that we're now bringing up more and more.
A lot of interesting things this year, that's for sure. Not only is it an election year, but we have a solar maximum going on right now. Lots of sunspots, lots of geomagnetic storms. Planet alignments are weird. There's a comet in the sky. Oh my gosh, we even have a mini moon that's going to be flying by for the next month. Interesting stuff, interesting times that we live in. I know there's been a lot of discussion about concern over the planting season in Brazil, for example. With the changes between El Nino and La Nina, do you think that's justified? Is the market putting in premium a little bit prematurely, do you think?
Not because of the drought that already exists and has persisted across a lot of Brazil to this point in the season. We've showed it in the report. The morning subscribers have seen, again, I've mentioned Eric showing the maps, Matthew in our reports, including updates from what they're seeing over there. And leading into the season, not having rain in some spots for up to 200 days, there's absolutely a concern as La Nina strengthens. La Nina is an issue that develops, we remember, right in the equatorial Pacific Ocean, which is right next to Brazil, and has that effect on most of the major growing regions, including that big Mato Grosso state we always talk about. Well, there are other problems in Brazil as well we got to watch. We've been keeping track of where it's actually stayed way too wet, and that includes southern Brazil and down into Argentina. Well, those patterns are less affected by the Pacific Ocean and more by the Atlantic on the other side of the continent. And so such extreme starts we're seeing across both Brazil and Argentina, the market's rightfully taking bullish notice.
On the wheat trade, we had a fairly sizable move to the upside today. Did that kind of counter the sell-off that we had on Tuesday? Does that kind of knock that out and put it back on an even keel again?
Yeah, it holds various points of support from the recent uptrend we've been in. It makes it look like a healthier type of correction last week as we paused the rally. You have a sign of bottoming still to speak of abroad. We're going to be careful because that's going to sound like a broken record, but anytime like we have, you're going to see optimism about the outlook for the French wheat market turning a corner, and relatedly the Russian prices, then that's a reason for the buying like we saw today, I would think. And that's going to be the theme going forward, is that globally we are seeing crop stocks tighten for wheat, and that should bode well for overall prices and even demand eventually back into the U.S. market.
You mentioned stocks. Let's talk about that a little bit. We have a big report coming up on Monday. It'll be at the end of September here, the final trading day of September, but it's the quarterly stocks report. Does that have potential to move the market much?
Absolutely. This quarterly stocks report is a unique annual one in the sense that the September update settles the ending stocks for the previous marketing year. Those ending stocks are the same that carry through the balance sheet and will ultimately affect the carryout projections for next year. So it's really important, and doubly so on this report because it's also a report where the USDA has in the past had these look back reviews at the last crop, and they've used this update as a reason, saying, okay, well, we only had this much left and we thought it would be this. That must mean the size of the last crop could be potentially different than what we said it was previously. And to the frustration of many, it can be the case that you get a revision to yield and or acreage for last year's corn and soybean crops on this report. And so that's why there would be in part this reason to see such a huge range of opinions coming in. Now, we can show the estimates. The stocks are expected to be, on average, the trade guesses, slightly higher than where they were a month ago on the report. But you have this range. Some folks looking for corn ending stocks to fall so comfortably below 2 billion bushels that they're in the range of 1.6 or 1.7, whereas on the other end of it, the expectation is that we're going to build those stocks back above 2 billion bushels. And how bearish would that be? That's why, with such a range set of ideas, you've got the potential for volatility on this report, unlike a lot of others.
This particular report is a quarterly stocks report, though, right? Not ending stocks?
It's a quarterly stocks report as of September 1. And for that reason, it can set the ending stocks for the previous 2024 marketing year.
Gotcha.
That also ends at the end
of up being the same thing, basically. Yep. All right, just wanted to clarify that. All right, now let's talk about the livestock side. It seemed to be kind of timid if you look at the closing prices today, but does that really tell the whole story?
I think it's a similar story to what we're seeing in the stock market. And how many times have we talked about that lately? The sensitivity of the livestock, but particularly cattle, to gyrations in the stock market that was today split between the major indices, the Dow and the NASDAQ and the S&P in between, higher and then lower, and trying to find footing yet after recently making these all-time highs, but yet now also being a little bit nervous too about the economy, and particularly the global economy. So the uncertainty here put a bit of a pause on what otherwise has been a solid rebound, a move up, not just for cattle futures, but for hogs as well. We see it in the speculative positioning, just like the grains over these last several weeks. The funds want to be more of a buyer of the livestock again. And, I think if we're okay with at least feeling stable on the economy and the bigger picture demand outlook, then the market should get back to focusing on shorter supplies in the current for the cattle, and maybe shorter supplies coming earlier next year that are a warning in the hogs.
I guess with the economy the way it is, I like to try and keep tabs on what's going on with the wholesale beef and pork trade. Are they holding their own now in value, or are they slipping?
Maybe the reverse of that, where they were slipping, yet now showing all of a sudden the resilience. As you watch that main indicator, choice beef, the average, having recently fallen below the 300 mark, but then bouncing quickly back above it. And so by a historical standard, still remaining really rather elevated. And it's been elevated, though, for some time. Stretch it back to a year ago in September, when a lot of these markets made their all-time highs, whether it's futures or just before that, the beef. that's been a year or more since that, and yet no real pushback, even with the fear of it, talking about higher prices, putting a dent in demand, even with all of the concern about the economy. We've got yet consumers at the grocery store buying up the beef that we've got and still supporting the higher prices.
When you look at the lean hog chart, I'm looking at October right now, and it just has that look like it's bumping up against overhead resistance at what would be a double top. Now, it wouldn't be an all-time top, but I mean, it's for the move, it looks like a double top. Is that a thing in the lean hog trade, or should we be concerned about that?
That can be a thing to watch for because of the failed follow through just short of that recent high that we were working with. If you get back up there and you continue to see profit taking on the longs and no real additional interest, then you can see that as a technical negative. And I do, in the sense that I know it still leaves room that we talk about on the continuous chart with the expiration gap left under where the August futures are. Still room upside where you could potentially see the board converge with the cash. There's still a gap or two above the market that traders have been eyeing here. And so if you don't continue to march towards that and gain the momentum back pretty quick, then this slow basing and eventual rounding out as it matches up with that previous high is a concerning development. So something we're watching as the rally pauses, but doesn't yet falter in a major way.
One thing I wanted to point out that I noticed, and I mean, this is just kind of an amateur point of view here, but if you look at the previous top that was made here about a month ago, it got up above the 200-day moving average, and it hovered there about a week. And now this time we cleared the 200-day moving average, and we've been there around a week. And I just wonder, it just seems like maybe it's decision time. Either it has to make another leg higher, or looks like if you go by the last time it was here, it failed about now.
I think that's exactly how those things work, because you do get up to points, and again, it's somewhere we've been before, and in some sense, it can be a point where people can recover losses and break even. It can also be a spot where those holding longs and wanting to see new highs look around and they say, are there going to be those that join me? And that's where you see the momentum and the volume and the jumping on of a trend that pushes up to new highs and then confirms that bunching action has now built a really solid base to go up from. And so that's one potential outcome, but it leaves us, because of this basing action, exactly in a window, like you say, that is decision time.
I know in the past, China was always a big buyer of U.S. pork, and then that kind of fell by the wayside as their economy seemed to be sagging here this year. Now with their own big stimulus that they have injected in the last week or so, do you think that'll bring back some pork buying or not?
That could be, and they have shown up on the tape here, not too far long ago. As much as we've been bearish about how big the hog herd has rebuilded toward in China, they've still been buying here or there exports, and you've got pork exports as a whole, including China, still on path to reach record after record, almost year on year. If it's not record price, it's record volume, because we're down a little bit. Overall, though, we're hitting new numbers all the time for pork exports, and we need that. They're a bigger portion, a third, or can be more of overall production. And so it's a big deal here as we head into, now National Pork Month, and we try to see about how we're going to start off the fall here domestically. If we can clear excess stocks because of solid exports continuing, that's only going to help. But it is a question, just like it is for the grains, this long-term relationship with China and whether or not they're going to be in the market long haul. We'll see. I know a lot of that's going to ride potentially on November 5th and everything that's ahead after that.
And as we wrap things up, I guess I would be remiss if I didn't mention that a couple other things that could throw some wrinkles in the market would be Hurricane Helene as it comes ashore. That could cause a lot of disruptions in the southeast and into the mid-south and Ohio Valley eventually. A lot of rain expected. Even though I thought it was kind of curious, the cotton market didn't respond to that today, and it would be going right through prime cotton country, where I believe a lot of the bolls are open. So That was kind of curious. And then, of course, also after the first of the month, we have the threat of a longshoreman strike. So that could throw another wrinkle in there. Don't know if they're going to take any executive action to maybe put that on ice for 60 days or not. That remains to be seen. But Joe, thanks for all the information today. I appreciate all the time and great stuff. I look forward to talking with you again next week. Joe Camp of Comstock Investments with us, and that'll do it for this episode. Thanks again for being a part of our day and allowing us to be a part of yours. For producer Brianne Hendrickson, I'm Marlin Bohling. We'll catch you next time on the Comstock channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.